we've got Josh Caron here with us, and we want to do a quick video around the PPLI news, or PPLI being in the news here. So wanted to welcome Josh to our conversation. I know we've had a lot of these conversations with our clients and their advisors over the last few weeks. So Josh, let's jump in just right away. Aiden and I were talking. We said we'd love to have you on to talk about the legislative, craziness and whatnot. So will you give kind of our advisor friends and our client friends an idea of who you are and kind of the work that you do, set the stage for us?
Yeah, of course, Ben. Aiden, thank you very much for having me. Appreciate the opportunity to have the conversation. My name's Josh Caron. I'm the Vice President of Federal Affairs for FINSECA. We're a national trade association, got around 6,000 financial security professionals all across the country who help their clients with their financial lives, primarily through risk protection, life insurance, annuities products, but also very much so holistic planning, retirement planning, assets under management, everything in between. My primary role here at the organization, I've been with us a little shy of 9 years now, is to be our direct sort of liaison to federal policymakers. So members of Congress, regulators all across the country who are thinking about, involved in, changes to either the tax code or the regulatory landscape, whatever it might be, that would impact our clients and most importantly, our members and their clients, and most importantly, impact their ability to help more individuals, more families, and more businesses be financially secure. So it's a little bit about me in a nutshell.
Perfect. Awesome. And we were talking, you've got a 2-year-old running around the house too, right? So
she
might make an appearance.
Yeah. We'll try not to, but she might make an appearance. It's not an impossibility. At the very least, if you hear a shriek in the background, I swear we're good parents.
I love it.
Well, Josh, I thought we'd dive into the deep end head first and pose. We kind of had a lot of questions and conversations from our clients during the week, just with the news, and as Ben said, the recent news with Senator Wyden. So one of those questions is, I'm currently a PPLI policyholder, and I read about Senator Wyden's investigation in the news. Should I be worried? Will I have an IRS target on my back, and can they disrupt my policy, or will it trigger an audit for me?
Yeah, so it's a really good question. I think let me try to answer it in two sort of separate streams a little bit here. One, so what do we know today? And I think that's important to level set for folks who maybe aren't as involved in DC following the bouncing ball like I am. When you hear sort of the news, Chairman Wyden wants to look into PPLI. What is that going to mean? Et cetera. It's good to sort of just reset. Where are we today and what do we know? So we got, of course, a press release from Chairman Wyden stating that he wanted to open an investigation into private placement life insurance. In the chairman's opinion and view of this marketplace, he looks at the product and he says, I think some folks might be using it to be able to avoid paying some amount of federal income tax. Therefore, I want to learn a little bit more about it. I want to know sort of who's out there using these sorts of products, what's the sort of benefit for them, and sort of what are the companies that are heavily involved. And so as part of that, he reached out to Lombard International, one of the leaders in the private placement life insurance space, with a series of questions saying, hey, give me some more information. The deadline to actually for Lombard to respond to Chairman Wyden is August 31st. So actually today as we're recording it. And then from there, we'll see how this evolves from here. So that's where we are today. There has not been any legislation introduced. There isn't sort of a near-term interim, like this is about to happen sort of vibe here. We are very much so at the beginning of a process. In terms of the IRS side of this, that's a little bit of a different thing. And so let's kind of spend 30 seconds on there just so we have a good understanding of what's happened in the IRS space. Of course, the Inflation Reduction Act recently signed into law, provided an additional $80 billion for the IRS. They're going to use that money for a number of different things. One of those being increased enforcement among folks who are more likely to be evading or dodging paying taxes. That's a big number, right? $80 million or $80 billion. And of course, it spurred a lot of conversation saying, what exactly are they going to use this money for? Secretary Yellen over at the Treasury Department just came out and said she's going to tell us her plan and the IRS's plan on how they're going to allocate those dollars over the next 6 months. So we're going to learn a little bit more here soon about what the IRS actually wants to do with their money. But a couple of points that are important here. One, that $80 billion actually just gets the IRS budget back to where it was a number of years ago. There's been a series of budget cuts to the department, to the service over the years. And so that not dollar number is actually just going to bring the department's budget back to where it was before. They're going to hire folks that are going to help answer the phones. If you've ever tried calling the IRS, you don't generally talk to somebody. They're also going to hire a bunch of folks who are going to work on modernizing their systems. Then they're going to allocate some portion of that to increased enforcement. That's largely going to be targeted at ultra high net worth individuals, businesses, fairly large scale in scope. And so for those folks, they could see potentially down the road here, increased enforcement, increased audit potential over at the IRS. It's going to take a couple of years to get folks up and trained. You can't just roll out an auditor the next day. And so I don't think there's going to be actual increased enforcement until a few years from now when they can get those folks, hired and then trained up. In terms of if you've got a private placement life insurance product right now, it's not going to increase your likelihood of getting audited by any stretch of the imagination. However, I do think it's really important that as we go into this next phase where the IRS is going to change and do more audits, if you do have a private placement life insurance, make sure you're following the letter of the law and all the rules that currently are in place and exist. Make sure that you are crossing your I's and dotting your T's, because the worst thing that can happen for you if you're sort of bending the sort of outer realm of what is permissible under the rules here, that might be something that gets you into hot water. So make sure that you're following the letter of the law, you're abiding by the investor control doctrine, you're doing all the things you need to be doing, and you should be fine from that perspective.
And to be clear, I mean, there's nothing about a private placement product that's going to trigger an audit, right? I mean, it's not a listed transaction. There's no reason an IRS agent or whatever is going to come looking for PPLI.
100% no, it is not on the dirty dozen list. Private placement life insurance is taxed and treated just like every other life insurance product that exists in the marketplace. There's nothing special or unique or distinct from that perspective. So nothing that would make the IRS look at or try to attain a list of private placement products and the individuals have them and go out and audit. That's not something that we would in any way expect to see, and something that would really be beyond the pale, very honestly, if the IRS did that.
Right. So should the advisors that we work with, Josh, should they be worried about continuing to recommend PPLI? I mean, assuming again for a minute that we're talking the vanilla, PPLI where we're doing interesting investments, but we're not going offshore. We're not doing again, as you said, the edgy kind of version of this. Should advisors continue to recommend PPLI to the right client?
100%. If it works for the right client and it's a product that makes sense as part of a holistic financial plan, we at FINSECA support all types of life insurance. We believe that the country needs more life insurance, not less. And there are lots of different life insurance products out there that are tailored to the needs of every specific individual or family or business that's interested in buying them. So I would have no, reason to be concerned currently about offering or recommending a private placement life insurance product to an individual or a family who deems that to be the right decision for them. I sort of started off here with what do we know? And of course, what do we know is that Chairman Wyden has opened up this investigation. Now, what do we not really know is sort of what comes next in a lot of ways. Typically what happens in these sorts of processes, an individual member of Congress, in this case, because Chairman Wyden chairs the Senate Finance Committee, he's got jurisdiction over tax issues and those sorts of things, will announce, hey, this is a subject matter that I want to investigate. I want to learn a little bit more about. Then they'll usually reach out to stakeholders, not dissimilar to what they did with Lombard, and say, let me get more information. From there, they usually will craft some sort of committee report that outlines what they have found. Then they'll usually do a hearing in which they bring together witnesses to talk about what they found, folks to go on the record and testify in front of the committee. And then after that, it's possible that they would introduce a piece of legislation to address whatever issues that they think they might have found in that subject matter. From that point forward, you still got to get it signed into law. Which when you're talking about tax changes here, you're talking about something that would need bipartisan support. It would need 60 votes to make it through the Senate, unless it was done under reconciliation, which would only require 50 votes. At that point, you would need unified control of government by Democrats. Again, unified control of government by either party is not something that happens a ton, which is a long-winded way of saying This is the beginning of a process with a very long sort of trail of things that would have to generally occur before you would see any piece of legislation signed into law. And it by no means is it guaranteed to ever become law. There could be any number of different changes. There's multiple elections. Of course, we've got the November elections here in just a few months that will change who's in power, who's sitting on what committees, and all those sorts of things. So lots of things can change from here to there. Nothing would stop me from recommending a private placement life insurance product to an individual or family that thinks it's the right part of their holistic financial plan.
Perfect. Follow up to that, Josh, we talked a little bit offline about this, but Senator Wyden described PPLI as an abusive tax scheme, to paraphrase. How is it actually viewed in DC as a location itself, or as an asset class?
Yeah, no, of course. So, as always, life insurance is a great product for families and businesses. For folks who have individuals who rely on them for income, who rely on their ability to generate revenue for them, over the course of their lives, life insurance is a great part of a financial plan, a holistic financial plan that puts in that protection that 90 million Americans every single day are glad that they have. And so life insurance and private placement life insurance is just another type of product, of just another type of life insurance that exists on the marketplace today. And permanent life insurance products, of course, of private placement is one of, have this great ability that, in addition to the risk protection that you're providing your family, which is why people buy life insurance to begin with, it also allows you to set aside some money that will grow over the course of many years. Lots of folks use their cash value that accumulates inside of a life insurance policy, to be able to manage a downturn in their own personal finances, to be able to help a business stay afloat, to be able to plan and use it for the retirement, put their kids through college, etc. There's lots of utilizations for the inside buildup and for the savings and investments that occur inside of a permanent life insurance product. So private placement really, at the end of the day, is exactly like, in terms of structure and design and the individual investments that are either made by the insurance company or a series of mutual funds, or in private placement, a little bit more flexibility and choice to be able to choose what investments back them. They're treated exactly like every other life insurance product because they are exactly like every other life insurance product that's on the market. And so, we think that broadly, folks who know about this marketplace up on the hill understand that these products, are just another part of the tool shed, tool case, whatever the right metaphor that I'm not using there correctly is in a family's sort of plan here. So, the difference, of course, with private placement and the sort of more available product, the variable universal life product, which allows for individuals, for families to have the investments and the savings component that back the life insurance put into the market so that it can grow, inside of the policy that way. Of course, private placement is just a product for accredited investors, for individuals who are looking for a little bit more flexibility and choice, who want to have the ability to invest in unregistered products, etc. And so, really at the end of the day, private placement is exactly like the variable life product chassis that is available to every single American today who wants to purchase one. So, there's a lot of folks who don't know a lot about it. And that's sort of, we think in a lot of ways, Chairman Wyden mischaracterizes the market when he talks about it as an abusive tax scheme. It is absolutely not, and so he's got that sort of in his mind. But when you sort of look back at the principles, the design of the product, how broadly available it is to every American in whatever form and fashion makes sense for them. Most of the folks understand that PPLI isn't what Chairman Wyden has described here.
That's super helpful. So with that in mind, I mean, is there a way for Congress or whatever, is there a way to carve out PPLI? I mean, since PPLI doesn't exist in the tax code, it's just a VUL, as you say, it's a regular insurance product. Would they be able to successfully carve it out? I think I read a Forbes article where a guy suggested that they might have a billionaire tax on PPLI or something like that. What is kind of your opinion of that?
Yeah, I mean, The tax code is insanely complex, and it's something that is really challenging to sort of navigate and to run through, and especially challenging for Congress whenever they try to make changes to it. It's really hard to do. We've only seen it a number of different times for folks who have been paying attention over the last handful of years, and I'm sure all of your members, or excuse me, all of your clients and all the advisors that work with them, of course, have been. Tax Cuts and Jobs Act back in 2017, large-scale overhaul of the tax code. Of course, the Inflation Reduction Act, originally designed to do a whole bunch more to the tax code, still had some pretty significant changes with the corporate minimum tax and the stock buyback tax and other sorts of tax changes that are in there. So there are ways potentially, I'm sure, that Congress could try to address this, perceived abuse as they call it and as they see it. But it would take, as I said earlier, a piece of legislation. It'd have to gather support. It's got to have bipartisan support. It's got to get advanced, eventually signed into law, et cetera. So, it's hard to see the likelihood or how exactly Congress would try to approach making changes to this marketplace. One of the things we do feel really confident in saying is that it would have to be done through a change to the tax code. It's not something that a regulator could sort of self-do themselves.
Right.
So it would be something that would have to be in there.
It's a fairly small revenue grab anyway, right, Josh? I mean, that's kind of been one of our points to our clients and advisors is, yeah, they could go after it, but it's a one-time, maybe, assuming they don't grandfather stuff too, right?
I mean, tax policies, again, it's a pretty challenging thing when you're trying to ascertain if I make this change to the tax code, am I going to raise money? Am I going to lose money? How much is it going to be? Right. All that sort of stuff. There's so many different variables that can go into those types of scores that make it really hard to sort of track down. I will say that Congress almost always tries to make tax policy future looking. It doesn't like making retrospective tax policy that's inherently unfair to the taxpayer to say, hey, you made a decision, a tax decision, a financial decision, under a set of rules that were, fair and legal when you made them. We're deciding now X amount of years down the road to change those rules. And so now you have to upend everything that you've done at whatever amount of cost it is to you to be able to, come into compliance with the new rules. So generally, they try to make tax policy forward-looking. Now, you did mention the billionaires tax from last Congress. I think that, or excuse me, not last Congress, last fall. I think that's something that's worth mentioning here. Of course, Chairman Wyden floated the idea of a billionaires tax when Build Back Better was being negotiated. It had a relatively short life before other members of the Senate and other members of the House said they weren't in favor, and ultimately Congress decided not to move forward with that. In his billionaires tax, Chairman Wyden articulated that the inside buildup in a private placement life insurance would count. That value would count towards the threshold of whether or not you paid the billionaires tax. And then if you did qualify to pay the billionaires tax and you received a death benefit from a private placement life insurance policy, that would have been taxed. We obviously had very strong concerns around that. Anytime you're taxing the death benefit of a life insurance product, that's a very slippery slope. We don't think that is appropriate in any circumstance. So, we definitely had concerns there, but of course it fell off the shelf pretty quick. But that is one articulation potentially, of a design that an individual could look at. But again, Congress usually likes to make tax policy retrospective, or excuse me, forward-looking and not retrospective.
Perfect. And then I think our last question, Josh, you answered a little while ago. You must be clairvoyant or some sort. But it was to do with, is there any proposed legislation change? And if so, what was the timeline? So you gave us that. We're not too worried on that end. So then with that in mind, do you have any parting wisdom or thoughts that we haven't touched on today that you would be helpful for us and our clients and our referral partners, advisors that recommend PPLI?
Yeah, of course. I mean, I think it's really smart. And I've said this a couple of times when you're talking to clients, when you're thinking about this product, of course, it's life insurance, right? If you're buying a private placement life insurance product, you're buying life insurance. And that is a core foundation of what you're doing here. As you kind of think about moving forward, unequivocally what we know. And again, articulated, I think this is the beginning of a long process with an uncertain ending for sure. There will be lots of steps along the way. And it's also not entirely impossible. I don't think this is likely, but not entirely impossible that, they announce the investigation, they seek the letter to Lombard. It doesn't really seem to take off. Maybe Republicans take control of the chamber in the Senate in November, and then they decide, hey, this isn't something we want to pursue. This could end up being a press release and nothing more. There's a million different things that have to happen in between there. I do think it's very, very smart, though, if you are somebody who is recommending these products, if you're somebody who's thinking about purchasing one of these products, that you follow all the rules that are out there. One of the things that the chairman does do in his press release is sort of conflate standard, straightforward PPLI products that are designed appropriately, that you work with qualified, advisors, you work with really great companies who are offering those products, conflates those a little bit with some of the more abuse ridden things that we've seen involving sort of like offshore accounts and like a whole bunch of other things there. If you're staying in that middle lane, if you are doing the right things with the right people, following all the rules, I think whatever outcome comes, you'll be in a really good spot, moving forward. So I think I would keep an eye on November. Of course, we'll see what happens in the midterms. That will be potentially the next step here. We'll obviously be waiting to see whether or not Lombard responds to the request for information from the chairman. But stay in your lane, do the right things with the right people, with the right companies, and you'll be fine. Ben, Aiden, guys like you, do this stuff really well. So stay in the lane and you'll be great.
Awesome. Well, Josh, really appreciate your thoughts this morning, your wisdom on this space, and being able to kind of provide a little bit of comfort to the clients who've been doing this and know that they're not going to get thrown in jail or whatever for buying an insurance policy, right? But
they might get thrown in jail for affiliating themselves with Ben Rainey and Aiden Elliott, though. That's a different conversation.
I cannot help you guys with that.
Yeah.
All right. Well, I'll stop our recording, but again, thanks, Josh, and really appreciate it.
Happy to do it, guys.
Thanks so much, Josh.
Not a problem. Let me know what else I can do to be helpful.